Hey, what's up YouTube and Triple T members? Jeremy Barber here, owner of Trade in the Trend chat room on Discord. The link is in the video description. There is a free 7-day trial. Come check us out, risk-free. So today I wanted to cover consolidation, exactly what it is, what it looks like, and what it means for the stock coming out of it. So what is consolidation? Consolidation is a time period where you kind of have a few characteristics. One, there's not going to be a huge range of price. It's going to fluctuate back and forth between a couple set numbers. The next characteristic is going to be, as I mentioned, there's going to be a clear support and resistance level. And then the last thing is typically consolidation is lower volume than the trading that was previous to it before it went into consolidation. And consolidation can take a couple different forms on a chart. Typically they're going to be triangles, which I covered in a previous video, wedges, and rectangles or channels. Those are pretty much the same thing. So, and I have a little video that I can show you what it looks like actually on a chart. But first I want to go over what causes a consolidation area and what to expect out of a consolidation. So typically you see consolidation after a fairly strong move, either down or up, and it's basically a battle of the buyers and sellers at that point, and it's going back and forth and neither side is really winning. What it does is it allows your indicators to kind of reset. Typically after a strong move up, we'll use RSI for example, you're going to be overbought. On a strong down move, your RSI is going to be oversold. So what that does is it relieves your indicators and it allows more buyers or sellers to come back in and either continue the trend or reverse the trend. So it's kind of an area where you really kind of want to stay away from it unless the range is wide enough to actually profit. Like if you have a $5 to $10 range that it's bouncing back and forth, you could absolutely be buying at support and then selling at resistance and do it over and over until it breaks out of consolidation, breaks out or breaks down, either one. But typically I use it for the breakout of consolidation. And the longer a stock consolidates, the longer it's stretched out over the chart, typically the more powerful the move is going to be coming out of that consolidation. So like I said, I'm looking for breakouts, which are breaking the resistance to the top side. And ideally, I like to enter half on the bottom at support and wait for that breakout, or enter once it has actually broke out and closed above it. That's typically what I do. It's a little bit safer because if you're buying at support, it can always break down still. Or if you're waiting for the breakout, which is what I'm typically looking for, there's no guarantee that it actually breaks through that resistance. So that breaking of resistance is your buy signal. And then you would be using that line, whatever the line is, the old resistance line, as your new support. It doesn't always work that way. You can have false breakouts, but at that point, if it's a false breakout, you're cutting your losses below that support line, and you're moving on to the next play. So let's go ahead and take a look at this video so we can see what we're talking about on the charts. Today I'm going to be showing you consolidation and what exactly it looks like on a chart. There are three main types of consolidation patterns. You have triangles, wedges, and channels. They're all going to accomplish the same thing. It's really more semantics than anything. So I'm going to show you with these pink lines down here. Just pretend we had candlesticks going down in here. So this is obviously a channel. Both lines should be pretty much parallel. A wedge, they're both going to be sloping the same way. They're both going to be sloping the same way, but still towards each other. So you can see both of these lines are still sloping down, but eventually they are going to cross each other. A channel, again, should be parallel to each other. They will never cross. And then a triangle, they will be sloping towards each other, like this. But again, they're going to accomplish the same purpose. It's all consolidation and is all the same thing. So triangles, channels, and wedges. So here we are looking at the daily chart for AMD. And it has quite a few consolidation areas. You can see from around April of 2020, we traded in between 49 and 59. So a $10 range right here. So really not much movement. We were just back and forth, back and forth. Again, this is buyers and sellers fighting each other, and neither side is winning. It's just going back and forth. So as I mentioned, you have a couple ways to trade this. You can buy on support and sell up at resistance and trade within. I am looking for the breakouts of these channels or wedges or triangles, the breakout on these consolidations, and I'm looking to capture this move right here. You can see we had quite a bit of consolidation, and then we finally break out in a pretty huge move up from 59 up to, well, all the way up to here, 87. So that's a huge move if you caught that full run. I definitely wouldn't have caught that full run. I would have been out probably somewhere on this candlestick right here. But again, we had that break out of this consolidation. The buyers won out on this and they pushed it way up. Well, then it went into another consolidation area. And this one would have been a little bit easier to trade in between. So you would have bought on support. If you would have bought right here, you can see you have this small gap right here. So I covered that in a previous video. You have a small gap. So here is a clear support line. So if you would have bought down here around 74 is the bottom. So even if you would have bought around 75 and sold up around 87, which this would have been the resistance on this. We did have, it was a false breakout, broke out, a doji, and a reversal back down to support. And then you could have, again, purchased around your 74, 75 area. And this was a pretty quick move, just over a week, straight back up to your 87. Again, you could have capitalized there. You got to pull back. It didn't pull back all the way down to your support. And then we got a breakout, but it wasn't really, you didn't get much of a move out of it. This thing basically went straight into consolidation after the breakout. Again, if you would have purchased on this candlestick on the breakout, even if you had purchased at the top of it, you're in at 92, and 2 days later you ran up to a high of 96. So that's even a $4, probably about 4.5% move right there, even if you had bought that. But again, I would have expected to see a little bit stronger move after this breakout. That definitely would have been one I wouldn't have been looking to hold very long, because you didn't get that move. Maybe you hold to pull back and check support, but once it just starts going, that's a sign that there's not many buyers to really push this price up higher, and you actually end up breaking back down through this, what should have acted as support. You ended up breaking back down. So now you're back within this trading channel right here, and if it pulls back even more down to 74, that might be a good buying opportunity right there. Hoping that this holds, this area that's shown to be a pretty solid support for the last about 6 months. We'll see. It had 3 different bounces off of it. So, but again, it could break back down because you still have some gaps to fill here and here as well. So I wouldn't even be completely surprised to see this fall back and find support in this area around the $60 mark. So that's AMD. This is a perfect example of consolidation because, like I said, it's pretty much been consolidating minus this one big move right here. But even other than that, on this one, not a real strong move, but still a move that could have provided some pretty nice profit right there. And take a look at a couple other charts. Okay, so here is Apple. Now this is a channel. All the examples that I have today are channels, but again, a channel that's rising and a wedge that's rising are both going to be the same exact thing. And this is actually a bearish chart setup, meaning that it more times than not is going to break to the downside. If you see it sloping up, it's most likely going to break down. If it is sloping down, it's most likely going to break up. So you can see we had a rising channel here on Apple for about 5 months now. We've been rising up, and once this broke out of this on this day right here, this would have been your sell signal, or if you were playing this to the downside, this is where you would have entered your short position. And from the breakdown of 132 area, it's down to 121. So you're looking about $11 per share profit minus fees and interest for shorting it. Or if you had played puts here. And you can see that it's been bouncing up off this resistance, pulling back. We had a false breakout there, go up, another false breakout, and then it regained and bounced perfectly off that support line, went back up, checked resistance, came back down, checked support. And again, this is another one, if you choose to play it that way, you could have been making money from about 120 up to close to 140. That's about $20 per share. Again, it depends on how risky you want to get. Playing these are risky because they can break either way. So you want to, if you're going to play, you want to make sure to get in as close to the support line. That way, if it breaks down of that support line, you can exit with a minimal loss and just try to ride it up to resistance. So you had these moves going up. And then we had a move right here. In this candle, you can't really see it. Let me try to zoom in. So you had this doji right here, which would have been a clear reversal, a doji right on resistance. Then we came down. We checked support one time. Buyers tried to push it up, but they weren't even able to push it up to this top resistance. Just pushed it up here, and then it flushed out. That would have been a perfect short opportunity right there on that break. Like I said, about a $11, $12 move. And actually, if we wanted to come down here to the low of 118, so that's about a $16 move from the break to the low. And the last chart we're going to look at is PVG. Again, this is a daily chart. These work on intraday charts as well. The trades are going to be much shorter. Obviously, anytime you're using a shorter time frame, your trades aren't overnight holds. They are quick day trades, but you can still trade the same patterns the same way. So here's one that is trading in either a down channel, a falling channel, a descending channel. All of those terms I've heard used. I usually call it a falling channel. So this is actually a bullish chart pattern. When you are sloping to the downside, and this one obviously hasn't broke out of this channel either way, but this is one that I'm going to be keeping an eye on to see if we can break this resistance to the top side. You can see the only couple times that it even peaked over this line, it gapped up and opened up above it, but then traded down during that day. Same thing here, opened up above it, went up a little bit, but then traded down during the day. So it hasn't even really come close to breaking out. Another thing you want to look for is volume on the breakout. When you finally do break, top or bottom, you want to see larger than average volume pushing that stock, saying that, yeah, this is a true breakout and not a fake out. Now, you could have large volume pushing it and it still be a fake out. It happens. We are just trying to put the odds in our favor. We're not saying this is 100% going to work, but if you can give me a 60-65% chance that it works, in the long run, we're going to come out on the plus side. So, like I said, this is one be keeping an eye on to see if we can break out of this down channel, this falling channel right here, and see if we get a move to the upside. So, in summary, again, channels, wedges, triangles, don't care what you call them. They all accomplish the same purpose, and it's consolidation before typically a fairly powerful move, whether it be up or down. And the length of time that it stays in that consolidation, it's like a spring getting compressed. And the longer you push it in together, the more powerful that once it finally does pop, it's a bigger move out of that consolidation. So that's going to wrap up our consolidation lesson for today. I hope you found the consolidation lesson useful, and you're able to actually apply it to your own trading, recognizing these consolidation areas. I use it every day, whether I'm day trading or finding a play to hold overnight. I'm constantly looking for these consolidation areas. So I hope you found good use out of it. If you did, make sure to send this video or send my channel to somebody that you know that might be struggling, or you see people in these Facebook groups or on stock twits, send them a link to my channel. Trying to help as many people as I can, and there's not many people out there putting out this kind of information for free to help new traders. So again, the link to the Discord room is in the video description. Free 7-day trial, risk-free. Come check us out. Hopefully next week the market's back to a little bit normal, more normal than it was, though I'm not really expecting it to be. But hopefully we can find a few opportunities where we can capitalize, and if not, again, be patient. Sit on the sideline and wait. You don't have to jump in something and turn around and lose money. Be patient and wait for the A+ setups to, show themselves. Once we find them, we'll take advantage of them. Well, thanks for joining. Good luck and stay green.